The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. It's Wednesday. It's Fed Day, folks. Fed decision, 2 p.m. Eastern Time. Press conference to follow at 2:30. We'll air that here live at TFNN. We pick things up, and we were in higher territory, but the market giving it up a bit as I come to you. We have the S&Ps now up just 11 points. You see the acceleration last night, that acceleration on the fact that the U.S. and China having some form of talks in Switzerland sometime this week, with Basil being over there. He's going to talk to a Chinese counterpart. Details probably going to be light, but nonetheless, an easing of tensions. But the market giving it back so far this morning. Right now, we're only up by 11 points. You're as high as almost 56.90. We're at 56.37. You are as high as 56.67. We've lost 30 points in the last hour and 45 minutes in the S&P. So a little weakness creeping into the markets with that acceleration last night. NASDAQ 100 up by 23 points, but we're coming to you at pre-market session lows, only up by 0.1%. The Dow right now up 145 points. The Russell up by 12, just over 2,000. Crude, 59.21. We were just over $60 briefly. Gold, how about the run gold had in the last couple days? On a little bit of dollar weakness, and I say a little bit, but nonetheless, you got gold right now trading at $33.99. We made it up to $34.48. You're talking about a $250 run from where we were from Thursday to Tuesday, and almost that same deal. $225 from Friday until Tuesday. Right, remarkable acceleration. We jump over to the dollar. Dollar, that was part of the acceleration in gold. You dropped a full point from 120 down to almost 99.20. The dollar right now at 99.43. We've continued to consolidate and bump up against that 100 area in the dollar. We're going to be talking to our man Teddy Kegstad at 40 past the hour, as we do every Wednesday. We'll talk some currencies, talk some yields, we'll talk some commodities. Always a good conversation with Teddy. Yields right now, what are we sitting at? 4.31. We're at 4.32 when I was writing the newsletter this morning, 4.31. But nonetheless, coming into a Fed day, all expectations are that they will leave rates where they currently are, which is currently sitting at about 4.25% to 4.5%. The interesting part of the conversation is, where do you go by year's end? Now, after this meeting, so the Fed meets today, they meet approximately every 6 weeks. They have 5 meetings left throughout the year, okay, after this meeting. Assuming this meeting that they don't do anything, which the market's about 98% sure they're going to stay where they are. 5 meetings left throughout the year, and by December, the market is looking for about 3 to potentially even 4 cuts. That's a lofty expectation, right? I mean, how do you go higher than that? You go higher than that, you're getting cuts at every single meeting for 5 straight, right? If the market's looking for 3 to 4 cuts right now, you have to look for the risk reward on either side. Well, what are the odds that the market's underpricing how many cuts they have? It's possible. Do we see some economic weakness with the tariff uncertainty, et cetera? Well, geez, with only 5 meetings left in the year and the market's pricing in 3 to 4, your only upside is a cut at every single meeting, 5 straight. I'm not sure the Fed's going to be on that type of a path. And if they are, I'm not sure we're going to like it with what the economy's saying to force their hand to be cutting so quickly. The other side of that is, do they have room to cut from 4.25% to 4.5%? I'd say they do. They can say that they're remaining restrictive to make sure inflation doesn't pop up by still bringing rates down a bit. Maybe you're cutting 1 to 2 cuts, but 3 to 4, you're talking about on the 4 cuts. 4 cuts would bring you down to 3.25% to 3.5%. 3.25% to 3.5% for overnight. The data doesn't even bring us close to that number. That's where we'll leave it. And if that's the case, the market right now is pricing in 3 to 4 cuts. And what I'm looking at right now is, you look at this market, okay? Outside of this acceleration, which hopefully was an anomaly, right? Nobody was buying debt. The tariffs were in a bonanza. That was prior to the 90-day pause. But we have some weakness here. You have lower price, you have higher yield from May 1st, 112.21, all the way down to 110.29, almost 2 full points. And boy, it's going to be interesting to see if the Fed and Chairman Powell is going to have an interesting press conference today. All right. What is he going to have to say when the whole conversation revolves around the data right now? The hard data hasn't really taken into account the uncertainty around the tariffs. So how are they going to move? How are they going to make expectations? And how are they going to make moves when the policies are moving so quickly? You have rapid tariffs on China, which all expectations are going to get dropped from 100+ % to 50 to 60%. Very difficult for them to get in front of that. They're probably going to try and wait. He's going to try and deflect. But nonetheless, 5 meetings after today, and we pick things up with the S&Ps up about 10 points. You take a look at this market, though. Okay, yesterday we get an uptick in volume. But, I was making the case, folks, and this is remarkable. Smart money got out of this market before Liberation Day, okay? We had a remarkable acceleration in volume from about February 27th up until about March 14th, when the market traded from 6,000 down to 5,600. You got a short reprieve up to 58.48, and then you rolled over. But look at the sustained volume on a consecutive basis. The S&Ps did at least 1.85 million, okay, for 3, 6, 9, 12, 15 straight days. 1.5. That is 3 straight weeks of trading that the S&Ps did 1.85 million. The lowest volume day occurring on February 26th. Many of those days well above 2 million, okay? You compare that to the fact that we have not done 1.85 million since the day after the 90-day pause. Okay, none of this trading action from the day following the 90-day pause has been above 1.85, and meanwhile, we did it for 3 straight weeks. Well, that range from 6,000 to 5,600, you're going to have to get through that entire volume area. And we're going to continue to face resistance in that area when you look at the sustained level of volume as this traded lower. And then you look at the fact that we haven't traded that much. It's May 7th, folks. We haven't traded 1.85 million contracts in the S&P in almost a full month, April 10th. We haven't done it once. We did it for 15 straight days on that initial trade lower, right? And then what happened? You got a dry up in volume, As you rose in price, it's a textbook case of quality volume to the downside right now, folks, and we're doing it again, okay? We are coming back up to this same exact area. The highs on March 25th were 58.37. We got a high today of 57.24. So 113 points away from where we were on March 25th. The volume is not as light as that day, which was just barely 1 million contracts. Okay, but you're talking about 1.3 and 1.3 on the last 2 days. Back this up one more. Yeah, even less. I wasn't including the last parts of this graph. Good, everything. It's April 30th. Acceleration a bit, 1.249. Same exact thing in the NASDAQ 100. Same exact thing. Sustained volume on that trade lower, and we're bumping up against that area right now. All right, folks, come back. We'll talk some Disney. Disney trading higher on their earnings. Uber trading a bit lower. Stay tuned. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We have the NASDAQ 100 up by 19 points right now, 19,895. And yeah, you see those volume numbers, though. And every time, a slight uptick, but it is remarkable, right? You look at the lows, you look where we've been, and I couldn't, and I am harping on it, but remarkable volume on that first trade lower, and you're going to bump into that. And so where do we go from there? You're going to face a little resistance at these price levels of 20,000 in the NASDAQ 100, and you're looking at a price point on the upper side of about 6,000 in the S&Ps. All right, we jump over to numbers. Disney, up $8. They beat on earnings, they're raising prices, and they're building a new park in a very wealthy part of the world, Abu Dhabi. Disney announces Abu Dhabi theme park and resort. Now, this is not even included in the $60 billion that they're already going to spend. The development is not part of the $60 billion that they've pledged to invest in its theme parks over the next decade. That's going to be their 7th theme park resort, fully developed and built by Miral, whoever that is. The Imagineers are going to lead creative design and operational oversight of the project. And the entertainment giant, is going to reap benefits of the royalties. You better believe it, man. And on the numbers front, they beat as well. So getting into the meat of it, how about earnings rising 16% to $575? The market was looking for $544. Now Disney's underperformed for some time, and maybe this is the beginning of a real turnaround here. For all the worry about airlines, lower prices, right, travel, etc. Yeah, and how about streaming? Subscribers to Disney Plus and Hulu up 2.5 million, 180.7. They had a couple decent movies out there. But nonetheless, Disney up by about 8%. Uber on the other side of that. Gross bookings, $42.8 billion in 3 months. Now that's gross bookings. They're taking a percentage, right? Driver, etc., getting a decent chunk of that. Market was looking for $43.1 billion though. And yeah, revenue below. And that's the number that matters, right? Gross bookings a great number, but how much are you taking out of there for revenue? $11.5 billion. That misses the mark. Yeah. The numbers are pretty stark though. And in terms of what they're going up. Trips up 18% over last year. That's a real number. How many times are people getting in the car, etc.? And also the report out there that they just came out and told everybody that you're getting back to the office. They are lower this morning, though. Uber shares clawing back some of that. You're only lower by $2. You were down to 80. Now this equity, all right, take a look at this thing. We'll go back on a weekly. This thing's been in a steady uptrend since about, the end of 2022. You're at $22. Not a clearly well-defined channel line, but it's the basic trend. Higher highs, higher lows. We're coming up to the highs of 2024 at $87, and you're breaking out of that channel line to a bit, even though it's upward. But yeah, so they're bringing people back 3 days a week versus 2. And one thing that I think is really going to get those workers, I was reading about it last night, they had a policy in place where if you worked for the company for 5 years, you were able to be a tenured employee and you would gain access to a 1-month sabbatical. That number is now up to 8 years. Imagine if you're on year 3 or 4, how that works. That feels like a little bit of a grab. You're coming back to the office, but they said you were away, nonetheless, that's what they're doing. A little bit of a revolt, but nonetheless, they're down by about $2 today for Uber shares. AMD, how about it? Trading higher on their numbers last night. There's some volatility for you, but up by about $2 with the market for AMD, up to 100 per 35. NVIDIA shares trading about 113. We jump around to some of the Magnificent Seven. Amazon, they catch a lift with maybe a pause in the China tensions or just an easing, a thawing a bit. You see that spike for Amazon, right? 184 to 188. We give back some of that like this market, though, with about 6 minutes to go until the opening bell on Fed Day. Apple shares slightly in the green at 199. You jump over to Google right now, flat. Meta shares trading up by $2. All right, what else we got going on this morning? Yeah, let's talk a little bit of Tesla. Tesla shares. So up $2. Is that today or a different one? Yeah. BYD. I don't know how you compete as Tesla in that market, right? EV deliveries declining yet again. Okay. And it's a dramatic drop-off from 2023, which was in the black. Cars are not the story for Tesla. Maybe the story is the future, but cars is not it, man. The data is not even close, and I think everyone agrees. It's just whether you agree that the story is enough. And yeah, data, right? Data, of course data is going to be king, man. Google has been pushing back on the Justice Department that they share much of the data it collects to build its search data. That's going to be the next friend for Google, man. There's all the news out there with them divesting AdWords or whatever. But you can see how the race for data is going to define everything going forward. And yeah, we talked about AMD, bullish sales outlook tempered by China concerns. You gotta diversify from China. And yeah, you talk about tensions, man. Pakistan and India, 2 nuclear-powered states, as tensions escalate. Yeah. Strikes overnight by India. Nonetheless, if there wasn't so much going on right now, that would be getting a lot more attention. All right, we keep our eye on yields. 111.11 right now. We jump over the dollar, as I mentioned. We're talking to our man Teddy Kickstack, coming up at 40 past the hour. A little bit of weakness from that 100 price point. 99.39 right now on Fed Day. I had there, maybe this one. Yeah, here we go. This is what I was looking for. How about $2.5 trillion in Asian sales for the dollar? Well, let's tell you about this one. It's been under an extreme resistance, right? We were at 110. You're at 100. You've lost 10% of the value. It says 8% from the February peak is what they're talking about there. And yeah, you got a lot of selling in that dollar right now, and it shows in the charts, to put it lightly. And yeah, how about the Enclave beginning today? Talk a little bit of finances in the Vatican as they look to choose a new pope. Always interesting to watch as well. S&P's up by 13. We're coming back for the opening bell, folks. Don't go away.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the markets open, and just like that, NASDAQ 100 goes red. How about that, right? Talk about a give back, man. All of it. All of it. By the time we turn green, NASDAQ 100 negative by 2. As I mentioned, Fed day. Going to be interesting to see how we come into that. You probably trade, and at some point, this market mellows out as we come into that 2 p.m. time frame. 2:30 press conference to follow. We'll air that here, right? Live on TFNN. And yeah, S&P's up by 7, NASDAQ 100 negative by 4. Dow up by 148 right now. And yeah, talking about the Vatican finances. So I'll post this one in the Tiger's Den because it's an interesting one. On the day that they choose a new pope or begin choosing a new pope, they're talking about the finances in the journal. And yeah, the Vatican's got an issue and they got a cash flow issue. They got plenty of assets, but they don't plan on selling those assets. They put them on their books at $1 to make sure that, no, we're not valuing them on a monetary basis. We're valuing them to never sell them. Okay. But yeah, talking about the numbers, we're talking about billions. Yeah. The budget deficit had tripled since the Pope took office. Pension fund faced up to 2 billion euros in liabilities that it can't fund. Now, what do they have? Okay. And they talk about here how you have accountants encouraged by Francis, the last Pope, trying to run training workshops for the clergy, just completely balking at that idea. That's not what they're attuned to. Okay, change is very difficult. We're seeing it right now in America. Imagine trying to have it happen in an institution like the Vatican, I'm sure. You got scandals. Wouldn't be the Vatican without scandals. And then they get into, though, how, yeah, the unforgiving math of running a cash-strapped country of tremendous wealth. Okay? The Vatican Museum walls are lined with masterpieces of Michelangelo, Leonardo. More than 1 million old and rare books are stored under the vaulted ceilings of the Vatican Library, including some of the earliest extant Greek language manuscripts of the Old and New Testaments, but they have no intention of ever selling the inheritance. Many of those works, including the Sistine Chapel, on its books at a nominal value of €1 each, to indicate its prizes. I mean, it's just interesting stuff, right? Look at that. Got to visit that. Got to make it to Ireland. Got to make it to the Vatican. I want to make it to Italy as well. Got to make it to Ireland, though, for sure. Nonetheless, that's a long one. But on today, they go to choose a pope. And, yeah, the ultimate reality show, right? But, boy, they got a problem, and I'll post that one in the Tiger's Den for sure. So, yeah, we're going to be talking to Teddy next segment. But, yeah, we'll talk a little bit of dollar, man. The dollar and yield's one of the most interesting facts of this market right now. Do we have a systematic change going on? We're at 99.43. You know, you look at the headwinds facing the dollar right now. You got a double-edged sword, okay? As in, boy, our debt's out of control. On a longer-term basis, how do you get out of that debt? You can devalue the currency, okay? And then right now, for the yields, though, like I was talking about, is the market ahead of the Fed? Are we looking for 3 to 4 cuts? If we don't get those types of cuts, are we going to see higher yield? If we see higher yield, is that going to add to dollar strength? And have you seen selling in the dollar that's going to provide basically a lower base, right? We'll talk to Teddy about that action next segment. All right, S&P's up by 13. Let's see how some of the equities with their numbers. Disney, look at it, man. We're right back to where we were on March 25th. Now, Disney, they had some real woes going on, right? Travel pullback in a big way. When those airlines were talking about it, you saw the consumer side. They reiterate they're going to be fine. We did open higher, up to a high of 103.31. Let's check it out on a 5-minute. You get a little bit of a spike, you got to give back. But Disney up by 9.1%. Uber down by 4.7% on their numbers. AMD shares, there's a bid for you, up by 4.2%. Intel up about 0.2% right now. You jump over to NVIDIA in the negative. Selling NVIDIA this morning. Jump around to some other equities. Oracle shares up by 0.4%. Amazon catches a bit up by 0.9. Microsoft in the green barely. Google in the positive. And Apple shares are flat this morning. Yeah. All right, that's pretty much what I had pulled back. We'll look at some of the retail stocks. How about it? Walmart shares. Check out Walmart, man. Look at this thing pushing highs yet again. We're pushing that 100-point mark. You were above there briefly. We put Walmart on a daily. Now, you look at the volume. It's a nice acceleration off the lows like a lot of this market, but we've trailed off since then. All right, look at the volume on Walmart. You accelerate on 178 million shares, then you do 93, 80, and 76 last week. All of those going higher price. And we're coming into highs when you sold off with 127 million. And this week so far, we've done 23 million. It's Wednesday. Yeah, so volume going to be light on some of these equities. TJX, another strong equity. On a weekly basis, yeah, not that bad. Chopping around, consolidating near highs, 131. On the flip side of that, Kohl's. Yeah, be careful of Kohl's if you want to try catching a falling knife. JetBlue shares come to mind when I say catching a falling knife. Look at this thing, man. Whew. Down another 0.1% today. Mickey D's, a little bit of volume last week to the downside. And we'll see. Today's a Fed day. You're going to get some volume today. We're only 2 days into the week. But McDonald's holding up well at 316 right now. Yeah, Crowd. Was it Crowd that told everybody to stay home? Yeah, they're going to trim their workforce by 5%. Ooh, from 450 to 420, just like that. And boy, look at this thing, right? You make it all the way back to where they brought down the internet, right? From 400 down to 200 in a heartbeat. You talk about a buy, but we're double topping and you're trading lower. I always say, folks, you don't got to be a genius, right? Sometimes, look at that technical area. You train up into the highs of 455, we reach a high of 451, and boom, just like that, $30 to the downside. Boy, that's a strong weekly bar on gold right now. Look at that bar, man. You ever get above 3,500, you take this all out with a weekly bar, that would be some remarkable strength. What you do have is you have 1.48 million contracts, right? Look at that acceleration on gold. That's your weekly. You take a look at the daily on gold. Slide this up. Those 2 days when we traded up to the highs and then you pull back, 408,000 and 367,000 contracts. Mammoth volume. Yesterday was a good day, but you still only did 261. We'll see if we can get some follow through today. All right, folks, we get the market chopping around. S&P's up by 8, NASDAQ 100 up by 6. We'll come back. We'll talk with our man Teddy Cakestat. Folks, head on over to the front page of TFNN. Under the newsletter tab, check out the Tiger Forex report. Under the services tab, Teddy's got a couple of great webinars. We'll come back. We'll talk with Teddy, talk a little bit of currencies, commodities. We'll talk markets. Stay tuned, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have markets barely in the green. I shouldn't say barely. S&P's up by 17, giving back some of the overnight gains, but all the markets green right now. Dow up 208, NASDAQ 100 up by 36. And right now, folks, we're going to jump over and talk to our man, Teddy Kegstad. Folks, you can check out Teddy's outstanding newsletter. The Tiger Forex Report comes out every week on Monday. New issues throughout the week when warranted. You gain access to a webinar in there as well. It's only $97, folks. It comes with a money-back guarantee. You check it out for 30 days. I know you'll get some value from it. And under the services tab, he's got a couple of great webinars out there as well, capitalizing on time with calendar stock option spreads and Japanese candlestick pattern stock and option strategies. Teddy Kegstad, good morning.
Good morning, Tommy.
So we are at a Fed day yet again, Teddy. Why don't we? Can we start off with yields? If we could, on Fed Day, of course, but the market, thinking maybe we stay where we are. What do you think about where this market is on yields? We're sitting at about 4.3% right now on the 10-year as we look for some speculation on Fed Day.
Well, I think that today it's going to be a non-event, so I really wouldn't expect very much. I think that you'll see yields probably pull back over the next few sessions in the next week, but nothing radical today at all. So, I mean, they're not going to do anything with the rate at all today. So I think it's going to be more about what Powell says, which really won't be that much either because it's Fed Day. So I would say we'll have pretty much a non-event day today, a lot of sideways trading. I would be very cautious as far as when it comes to yields and currencies today as far as trading. I would wait until at least the Asian to European session tonight before you really try. If you're gonna start trading actively, I wait until then. If you're in a position, I keep your stops tight, and I wouldn't even think about getting in unless you have a really valid signal, because I don't think you're going to get any follow through. I don't think your reward to risk ratio is going to be really strong today. So and then afterwards, like I said, I think yields will start to pull back a little bit, which you'll see a decline in the U.S. dollar as well.
What do you think about going out this year, Teddy? I was looking at even swaps, and I know that it varies, but the market's thinking maybe 3 cuts, maybe even 4. Let's just say it's even 3. After this meeting, they have 5 meetings. What do you think of the premise of the Fed now? Trump wants them to cut, and we got a good jobs number last Friday, though. I'm trying to wrap my brain around. All right, where is this market? I try not to go too far out in the future. Then it's just a crystal ball. Nobody knows. But what do you think after this meeting? The market has some cuts priced in. And what do you think about that in terms of where we may end up?
Well, the market definitely has at least 2 quarter points priced in already, or at least, I'm sorry, the expectations are that.
Sure.
The pricing in is not because of where yields are at. So just for considering where yields are at right now, and then pricing in another 2 quarter points, yields should be lower than they're at right now in the market. So the market is actually hammering the yields right now. There's a big gap spread between the actual discount rate and the actual market rate. And that's this
Nice.
market, that's what the market's doing. It's commanding that right now. So
Nice.
now I think that as far as, having more than 2/4 points over the next year, I think that's being a really, really, at least with the current Fed, I think that's an impossibility, to be quite honest with you, because Powell was very transparent. And then the reason I'm saying that is why has he not already cut one more time already this year? He did back in October, and the conditions right now are actually more. If he did it then, why is he not doing it? By now, he should be doing it. So
I agree. I wanted to ask the question because I agree totally. Yeah.
And so I think he's switched. Before he, like I said, he was one of the most transparent Fed chairman in my lifetime. It was very easy to see what he was going to do because he said what he was going to do. I was just saying, calling it right out before. There was no surprise. Now he's not going with this narrative. He wants unemployment higher. It's not going up. And that's when he wants to cut rates. That would be the only thing I think that's going to do it. Until then, he's not, because as far as the inflation numbers and all the other data, he should be cutting rates. But then the Fed always does the opposite of what they're supposed to do. So it's not in their best interest right now, and he knows that
he's going to wait. Yeah,
he's just going to push it out, which is really a bad play, because we know that the last administration did so much financing with short-term rates that it's all coming due instead of using the 30-year, and we need to do it on the 30-year. So he's costing the U.S. taxpayers a lot of money right now.
Do you think that's going to weigh on the dollar? Because debt's in focus, of course, and I'm not talking about today on Fed Day, but
right.
Looking 3, 6, 12, and boy, you really go out. The dollar's in a great spot right now at 100. And I'm like, man, I'm trying to think longer term, and it is a tough win for that reason. For that debt number, man, boy, it's a rocket ship. We know it is.
Well,
and at some
one
point,
thing you have to look at for as far as dollar strength now. If there is no rate cut on this meeting, here's what's going to happen. Next month is very likely that the Bank of Canada is going to cut rates. Okay, and it's also very likely that it could happen in some other central banks, which means they're going to be cutting rates in front of us. Okay, and if that's the case, we're going to see dollar strength come in by default, and that means also yields probably will also go up as well. So this is something to be very mindful of. If Powell doesn't do this, it's very likely that we'll start to see dollar strength coming into the summer. So that's just something we need to watch out over the next couple of weeks. We'll be talking about that after this meeting, and then we'll start to see how the trend goes. Because if the expectations are that he's not going to cut for at least another 2 or 3 meetings, well, that's going to then we're going to probably start to see a trend, when that means that yields are going to be going higher and not lower.
Okay, watch out. And the DXY in general, what do you think about you do a great job, and thanks for pointing out those currencies, man, but you breaking down the individuals, but watching this DXY, that nice 100 point, we rejected a little bit today. What do you think about the DXY at this at 99.43? We pulled back last couple days, but right at that 100 price point right now.
Well, today I think you're not going to see very much action. We've had a nice pullback the past few sessions. Right now it's been in a corrective rally over the past couple of weeks, if you will.
Yeah.
So it was interesting because the bottom that we've formed over the past month is kind of a head and shoulders bottom, and now we're kind of at that critical test. I think today will be sideways. Now, if the dollar index continues to go lower, well, then we might be making new lows. Okay.
Yeah.
But I think that there's probably a better chance that, like I said, if Powell doesn't cut rates, I think yields are going to go higher, meaning that we'll see the dollar index actually start to climb, which means we'll have that head and shoulders bottom. And if that is secure, if we take out the high from last week in the dollar index over the next couple of sessions and get a close above it especially, then I think you could probably see the dollar index get up to 101 to probably, it could even get up to the 102 area over the next, say, month.
Okay.
So, and that would be a nice, but then remember, it is still in an overall downtrend. This is a corrective rally. I just think we could have a nice extension on the current corrective rally.
Nice. Yeah, I just looking at it over years, it's remarkable how much that dollar has moved, of course. And then what do you think about gold? I tell you what, can you hang with us? We'll talk a little bit of gold and some crude when we come back, all right?
Sure.
Okay, stay tuned, folks. We'll come back with Teddy. We'll talk some gold. Gold down $19 right now, but you're trading at $34.03, and you got that crude contract still under $60, $58.94. NASDAQ negative by 1 point. S&P's positive by 10. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the markets in positive territory. You got gold off $18 at $34.04. We're talking to our man Teddy Kegstad. Don't forget to check out the Tiger Forex report, folks, right under the newsletter tab at TFNN. Go check it out. And yeah, let's talk a little bit of gold and crude if we can. So you gave us your take on the dollar, which, you know, if we get that type of, even if it's counter trend, but boy, remarkable acceleration the last couple days, up to 34.50 almost yet again. What do you think of gold at 34.04 right now?
Well, I think it's at, we're pretty near that high that we set, a week and a half ago. If we take out yesterday's high, I think that we're going to have a really good shot at challenging that previous high. I think that we can get up to, I would say, that 35.55 level if we start to, pierce through that, little ceiling there, if you will. I wouldn't get too overzealous on the, expectations of going much higher than that right now. Especially if Powell doesn't do anything, I would wait until let's see what he does today. And I think, like I said, he's not going to do anything. And then I think that's going to lead. I think gold's about to kind of basically start buffering on a high and start to set a range trade. Where I think that the low that we set a few last week, that's probably going to be near where you're going to see your bottom of the range for gold. And now we're going to probably test, like, I think between basically 3,240 up to now a 35.55 price target. That you might start to see that as a range. We can start to bounce between that. Until we have any really definitive clear view of what the Fed is going to do in the future. Because, like I said, if the other central banks do start to cut rates, like I do believe that Canada will as well. Now, the Bank of Japan's not going to do anything. It's very likely that China will. It's very likely that it'll happen also with the ECB. So we'll see if those countries start doing that, then we'll start to see this start to gyrate a little bit.
Teddy, I appreciate it so much, man. Great information. We appreciate it. We'll look forward to talking to you next week.
All right, take care, Tommy.
Take care. Folks, thanks so much for starting your day right here with me with the Morning Market Kickoff at TFNN. Stay tuned. Basil Chapman coming up next with the Tiger Technicians Hour. Live programming after that all day, and I'll see you tomorrow at 9 o'clock.